Good afternoon, everyone. I'm Garv,
And I'm Kiaan.
and today we're going to be presenting about Micron Technology, a leading US-based memory company which designs and manufactures DRAM, NAND, and NOR memory, which powers PCs, phones, cars, and increasingly AI data centers. Hence, our recommendation for Micron stock is buy. The current price of Micron is approximately $411, and our target price is $500, hence implying about 21% upside.
Over the next few minutes, we'll be explaining why Micron is well positioned in the AI driven memory market, how its financials show strong margins and cash flow, and why its valuation offers an attractive long term opportunity. Now we'll be talking about our investment thesis.
So, our investment thesis rests on four key pillars. Firstly, the AI-driven memory supercycle. AI data centers require massive amounts of high bandwidth memory, creating multi-year demand tailwinds. Secondly, DRAM leadership and HBM ramp. Micron is the top 3 global DRAM producer and is expanding HBM 3E production, which is critical for AI workloads.
Thirdly, margin expansion. Gross margins are recovering thanks to a higher pricing and a shift towards premium products, including HBM. And lastly, valuation upside. On conservative FY26 estimates, Micron trades at 11 times EV/EBITDA, offering strong upside with asymmetric long term risk and reward. This sets the stage for understanding Micron's business model and market position. To better understand Micron's earning power, it's important to look at how the revenue is structured. The majority of revenue comes from DRAM, which is the most profitable and AI sensitive segment of the memory market. However, NAND makes up a smaller portion and is typically more commoditized with lower margins. This concentration of DRAM is important because AI workloads rely heavily on high performance DRAM, positioning Micron directly in the strongest growth segment.
Now, from a geographic perspective, revenue is diversified across China, US, Taiwan, Asia, and Europe. This diversification reduces overexposure to any single region and helps mitigate geopolitical and trade risks. Overall, Micron's product mix and geographic spread provide both growth exposure and risk balance. So, Micron is also one of three dominant players in the global DRAM market, as we said earlier, alongside Samsung and SK Hynix. Its high bandwidth memory market share is growing, with 2025 estimates showing Micron capturing quite a meaningful portion of the fastest growing segment.
Micron supplies HBM3 to Nvidia and AMD, both leaders in AI chips. Being the only US-based pure-play memory company also provides advantages in the domestic supply chain, especially given geopolitical and trade considerations. With this market positioning, we can now explore what drives Micron's revenue growth. Revenue growth is being driven primarily by AI memory demand. As the data centers adopt AI workloads, AI servers now make up a larger portion of Micron's revenue.
So the three key revenue drivers are driving this growth. AI demand is rising because more AI servers require more DRAM, especially high bandwidth memory. Pricing recovery is occurring as DRAM prices rebound from cyclical lows which support margins. Finally, a higher value product mix is contributing as premium memory like HBM accounts for a growing share of revenue, boosting overall profitability. These drivers lead us naturally into Micron's strategic thesis, showing why growth is sustainable. AI servers use 6 to 8 times more memory per rack than standard servers, meaning more revenue per server. Each GPU also typically requires 6 to 8 HBM stacks, further increasing memory demand.
HBM3, which stands for High Bandwidth Memory 3 Extended, sells at a premium compared to DDR5, raising average selling prices and gross margins. In summary, more AI leads to more HBM, which leads to higher prices, higher margins, and stronger revenue growth. This strong structural demand is also protected by Micron's competitive moat, which we will explore next. Using the Porter's five forces, the threat of new entrants is low because memory fabs cost over $20 billion to make. Supplier power is moderate because equipment from ASML and Applied Materials is highly specialized.
Meanwhile, buyer power is moderate. Large AI companies negotiate, but switching memory suppliers is difficult due to compatibility and reliability issues. Also, substitutes are low because there are no real alternative to DRAM for AI workloads. Rivalry is also quite high, but limited to Samsung, SK Hynix, and Micron, which constrains over competition while keeping innovation intense. Overall, high barriers to entry and limited substitutes secure Micron's market position, protecting revenue and margins. In QY FY25, revenue was 11.3 billion, up 22% quarter over quarter and 46% year over year. Gross margin reached 44.7%, showing strong recovery from prior lows.
The operating margin was 33.3% and net income was $3.2 billion, exceeding expectations. Free cash flow turned positive at $3.72 billion, reflecting solid financial health and capacity for strategic investment. These strong fundamentals underpin our valuation analysis. Our base case uses 11 times EV/EBITDA, giving a $500 target. In the bear case, the stock would be at $350 and 9 times the EV/EBITDA, while in the bull case, a very optimistic case, it would be at $620 at 13 times EV/EBITDA. Gross margins are also recovering heavily from FY23, going from negative lows to around 38 to 45% by FY26, showing how pricing and recovery and Micron's shift towards more premium products is helping improve profitability and gross margins. However, while these improving margins reflect stronger financial performance, they also depend heavily on market conditions and continued demand. This brings us naturally to Micron's key business risks and ESG considerations.
So, the key risks include memory price cycles, which could affect Micron's revenue if demand slows, high capital spending, as fab investments are very costly and can impact cash flow, and also a possible slowdown in AI demand, which may reduce future growth. And we'll also be going more in depth into these specific risks in the next slide.
On the ESG side, Micron is working on reducing emissions and recycling water in its semiconductor factories. For the social side, it invests in workforce training and diversity programs to improve its social impact. While for the government governance side, it's maintained through an independent board and long-term incentives that align management decisions with shareholder interests. By actively managing these risks while focusing on ESG practices, Micron improves its long-term sustainability.
Now, let's take a closer look at some of these risks. Firstly, DRAM and NAND memory prices tend to swing very sharply. If there is too much supply in the market, prices can fall quickly and profit and which reduces Micron's profit margins and overall earnings. Secondly, Micron needs to spend heavily on building and upgrading its semiconductor factories. However, this also creates a challenge. If the whole industry expands production too much, it could lead to oversupply and falling prices. But if Micron spends too little, it may fall behind competitors in terms of technology and production capacity.
And lastly, Micron's revenue depends a lot on demand from data centers and personal computers, smartphones, and AI technologies. So if any of these sectors slow down, it can reduce Micron's growth rate and even affect the valuation of the company. In conclusion, we recommend buy with a $500 target. AI growth is driving a memory supercycle, creating multi-year tailwinds for Micron.
Furthermore, margins are recovering, valuation is attractive at 11 times EV/EBITDA, and the risk-reward profile is compelling for long-term investments. That's all for our presentation, and thank you for listening.
Thank you.